In this video, you're going to learn 3 things that actually matter when it comes to your credit score. Just 3. If you're planning to buy a home, to buy a car, or get a loan in the next few years, and you want the best interest rate possible, this video is for you. And if you want to take control over your credit score, this video is for you. Let's define what is actually credit score. In Canada, your credit score is 3-digit number between 300 and 900. Here's how the range typically breaks down. So in between the 300 and 580, we are considering as a poor credit. In between the 580 and 670, we are saying that it's a in between 670 and 749, it's good. And everything above that, excellent. There are 2 main credit bureaus that track your credit, which you most probably know. We have Equifax and we have Transy. So those bureaus, they don't decide if you should get a credit or not. Their primary job is to collect all the information about your credit activity and create a report. Let's break down exactly what makes up your credit score. There are 5 main factors, and some are way more important than others. Here is our breakdown. Payment history. It impacts your credit score by 35%. Credit utilization is 30%. Length of the credit history, which usually people think has the biggest impact, is 15%. Credit mix is how many credit cards, loans you have, it's 10%. New credit and inquiries, it's 10%. Let's go through each one of them now. So first, as I mentioned, is the payment history, which is significantly chunk, 35%. This is the most important factor. The 30-day late payment can drop your score by 40 to 80 points. A 60-day late, even worse. When it gets to 90-day late, it's a major damage to your score. Collections, foreclosures, and bankruptcies are absolutely devastating for your credit score. Always make at least minimum payment on time. Set up auto pay for at least the minimum on all your credit scores and loans. This is the second most important factor. Credit utilization basically means how much of your available credit you are using. So let's say you have 3 credit cards. Card number 1, you have a limit of $5,000. Card number 2, you have a limit of $3,000. And card number 3, you have a limit of $2,000. Total available credit in between card number 1, 2, and 3, it's $10,000. Let's say your current balance on card 1 is $1,000, on card 2 is $500, on card 3 is $0. It means that you totally used right now $1,500. So your utilization is $1,500 divided by total available credit limit, which is $10,000, and you are at 15%. This is amazing. Here is how utilization affects your score. 0 to 10%, it's absolutely excellent. 10 to 30% is good, and 30 to 50% is fair. 50% and above, we don't want to be there. You want to keep your utilization under 30% all the time. So if you use your credit cards on a regular basis and you need the $10,000 per month, increase your limit to $30,000. And keep the utilization under 30. Okay, so let's get to the third factor, and the third factor is the length of your credit history, which is 15%. This one is pretty straightforward. Length of a history is basically how long have you had the credit. It calculates 2 ways. 1, the age of your oldest account. Please never close your oldest account. And the average age of all your accounts. So let's say you have 3 credit cards from before. Card number 1 opened 9 years ago. Card number 2 opened 5 years ago. And card 3 opened 1 year ago. So your oldest account is 9 years. Your average is 9 plus 5 plus 1 divided by 3, and we get to 5 years. Here is the key rule. Do not close your all credit cards. It's that simple. If you close your 9 years old card, your average age drops from 5 years to 3 years. That's right there just impacted your score. Start building credit early. The sooner you start, the better. Okay, let's get to the 4 factors, and it's credit mix, which is only 10%. Credit mix is a variety of credit types you have. There are 3 main types. Revolving credit, which is basically our credit cards, line of credit, installment loans, which is basically mortgages, car loans, student loans, and we have open credit, utilities and cell phone bills. So having a mix shows lender you can handle different kind of debts responsibly. There are 2 kinds of credit check. Hard inquiry when you apply for credit card, for a loan, for a mortgage, and there is a soft inquiry. That's when you check your own credit. Hard inquiries stay on your report for about 2 years, but usually only affect your score for about 1 year. Each hard inquiry can drop your score by around 5 to 10 points. Here is the key. Don't apply for a bunch of credit cards or loans back to back. Okay, so now that you understand what makes up your credit score, let me give you a 1-week action plan to start improving it right away. I'm going to tell you exactly what to do each day. Okay, number 1, you're going to get a copy of your credit report from both Equifax and TransUnion. You're entitled to 1 free credit record per year from each bureau. Highlight anything negative like late payments, collections, high balances. There might be also errors on your report. Make a list of everything that's hurting your score. That's your day number 1. Let's move to day number 2. Sign up for credit monitoring apps. These services will show you your score. It will update regularly, alert you if anything changes on your report, and give you suggestion to how to improve your score. Let's go into day number 3 to fix your payment history. So we are going to set up auto pay on everything. Go through every credit card, every loan and bill you have, and set up automatic payments for at least minimum amount. This one move can almost guarantee you never miss a payment again. Please dispute any inaccurate or late payment. You can dispute online or by mail. The bureaus usually have 30 days to investigate. If they cannot verify the negative items, they have to remove it. Okay, let's move to our next day, which is our day number 4. Tackle your credit utilization, and that's how you're going to do that. Calculate your current utilization. Do you remember the formula from before? Add up all your credit card limits, add up all your current balances, divide the balance by limits. That's your utilization percentage. Your goal to get under 30%. Make a plan to pay down your balance as fast as you reasonably can. Pay down cards in this order. First, the one with the highest utilization. Second, the one with the highest interest rate. And the step 3, call your credit card companies and ask for a credit limit increase. Day number 5, build your credit history. And this is how you do it. Identify your oldest credit card. If you're not using it, make a small purchase. Set up auto pay for the full balance. This keeps the card active and protects your credit. Another thing, consider becoming an authorized user. Let's say you have a spouse, parent, very close friends with a long credit history, excellent payment history, and low utilization. You can ask them to add you an authorized user to their card. You might benefit from their good history for that account. Now let's talk about how long it takes to reach 800 plus. Depends where you're starting. If you're starting at 150 to 700, you might reach 750 at 6 to 12 months and 800 12 to 24 months. If you're starting at 700, you might reach 800 in about 6 to 12 months as well. If you're below 650, it might take 12 to 18 months to reach that 700. 2 years approximately to reach 800. The key is consistency, like with everything else. You cannot fix your credit overnight, but you can definitely start. Thanks for watching, and I will see you in the next one.